That we're tracking this evening for you. The RBI, we understand, has constituted an expert panel to review its existing economic capital framework. The six-member panel will be chaired by the former RBI governor, that's Mr. Bimal Jalan. Latha Venkatesh is joining us for more. So, Latha, this was the big trigger that everyone was watching for after the first meeting, after the November 19th meeting of the RBI board. What are the takeaways? What can we make from this notification, perhaps? Latha.
Well, I think the three big takeaways for me are, one, the composition of the committee. It seems extremely fair because you have two former governor, deputy governor as members, key members, chairman and vice chairman. And then you have two members who are board members, senior people who have been on the board for a longish bit. And then the two other members, Subhash Garg and Vishwanathan. One would assume one will speak for the government and one will speak for the RBI. So it does look evenly balanced, and the takeaways, the recommendations of this committee will not be doubted because the composition was in favor of one party or the other, or so it seems. It looks like a fairly well-constituted body, though I would request comments from experts on the composition. The second important takeaway is that the committee will report within 90 days from the date of its first meeting. Now, when we tried to reach Dr. Bimal Jalan for his comment, he said, I will comment after I get the letter. So clearly the letter has not reached the members of the committee. So first it reaches them, and then the first meeting is called, and 90 days from that day, we're almost at the end of the year. So chances are the committee will meet earliest in the first week or first part of January. 90 days from that would mean that, it would be post March 31st that the time limit would end. It is clearly not possible for the government to take any of the monies from the RBI's capital, even if the recommendations allowed it. So it will come only into the next year's budget, or the decision will be taken by the next government. Probably an NDA government, probably a BJP government, probably some other kind of government. But clearly the decision is not going to be taken to take away the retained earnings of the Reserve Bank by a government that is about to face the elections in the next few months. So that itself is a very fair and positive outcome. A third point that intrigued me is the terms of reference of the committee. And that's, I just wanted to read that out. Keeping in consideration, one, statutory mandate under Section 47 of the RBI Act and the profits of the RBI shall be transferred to the government after making provisions which are usually provided by the bankers. Now, that phrase is a little surprising. The Section 47 of the RBI Act itself says that whatever surplus after meeting expenses is left with the RBI may be transferred to the government. So this additional phrase, which are usually provided by the bankers, is something I'm not able to comprehend. We have to find out what was the purpose behind putting that phrase in the terms of reference. To help us understand the release and the decision better, we are joined by former Deputy Governor of the Reserve Bank of India, Mr. H.R. Khan. In a bit, we're going to be joined by more experts. Mr. Khan, good evening. Thank you very much for joining us. Your first thoughts on the composition of the committee. Do you think we are going to get a fair result? There are two former RBI inmates and one current RBI inmate in the committee.
Who are the other three members?
So I'm sorry. Okay. Dr. Bimal Jalan, Chairman. Vice Chairman, Dr. Rakesh Mohan. Other members, Bharat Doshi, Sudhir Mankad, both of whom are current Central Board members. And the other two members, Subhash Garg and N.S. Vishwanathan.
And?
N.S. Vishwanathan.
Okay.
Does it look like it is balanced between government and RBI? No side will have an advantage, you think?
No, I think it's a fair, balanced composition.
Okay.
And both the chair and the vice chair are well-experienced economists who had been at the helms of affairs. And both of them understand RBI balance sheet very thoroughly. In fact, Dr. Bimal Jalan has been architect of some of those provisions in the RBI Act. Probably he will bring his experience into this committee.
Fair point, sir.
It's a good composition between both the chair and the vice chair.
Okay, so the committee will submit its report within a period of 90 days from the date of its first meeting. This looks like, Dr. Jalan said that he hadn't yet got the letter. I assume the other members also will get the letter in the next few days. It therefore looks like 90 days will end, on March 31st if the committee were to meet on Jan 1st or the first week of January. So does it look like any decision on the capital can be taken only by the next government?
No, this exercise in 3 months, or they may take some short extension, because this issue is a very complex issue, and which has been going on for last so many years and maybe decades. And this economic capital framework, how to create a structure which is every year, at least from my own experience, I would say, every year we used to have the haggling, how much should go and how much should be retained in the provisions. And you quoted Section 7.
Yes. Mr. Khan, we are losing you. Mr. Khan, we are losing you. If you can repeat it. That was going to be my next question to you. The terms of reference say statutory mandate under Section 47 of the RBI Act that the profits of the RBI shall be transferred to the government after making provisions, which are usually provided by the bankers. I didn't get that at all. Is the terms of reference clear to you?
Section 47 is quite convoluted. So what is usually provided by banker, whether it is central banker or commercial banker, not clear. And central banks, you can't treat them on the same footing as commercial banks. So I think we have to, I think this committee has flexibility to interpret that in a manner it thinks appropriate. But if I'm permitted, I'll just flag 3-4 issues.
Please.
I'm sure this committee will look into that.
Yes, that was to be my next question.
One is stock problem, stock issue, other is flow issue.
Yes.
So what has accumulated over time, different theories have come, including Arvind Subramaniam's recent book, and when he was CA also, that between 5 to 7 lakhs is excess and all that. So they have to look at that part. And the flow part also, they have to see in future how it comes and how much should be kept for different reserves and provision, and what sort of stress tests it will do. And the one issue, bone of contention possibly between RBI and the government is whether it is a triple A and what is the level of confidence, 99.99 or 99. So these are some technical issues they have to keep. The third issue I would suggest, if since you're looking at the stock issue also, we have to of course look at the global practices and also keep idiosyncratic issues of India's. For example, we are a perennially fiscally deficit country.
Yes.
So the government may not be in a position to support. So that part we have to keep. And second issue, if something is accumulated over the period of time, you can't pass it in one shot to one particular government or one particular budget. So you have to have a dividend smoothing sort of a reserve once you have identified the excess. And over a period of time, you can transfer.
Yes.
Have a targeted transfer the year that profits fall, because central bank profit you can't predict.
Yes.
This depends on. It's not a commercial bank every year 10% increase.
Absolutely.
So it depends on the interest rate both locally as well as globally, because the large chunk is your investment overseas.
Yes.
So but different will be useful if you have a buffer available which you can give over a period of time. The year the profits dip, surplus dips, you can use that. And the fourth and important point is how to use the money. So if you're taking the money, whether you should go for your revenue expenditure, or you retire your debt, or you use capitalization of public sector. I have one simple point which I want to conclude, is that I would tend to agree with Mr. Arvind Subramaniam, because one part of the reserve is kept for financial stability issues.
Yes.
And if there are really issues of the banking sector and there is a reform accompanying this recapitalization, identified part should go for that. Provided, as you said, there has to be a clear covenant, but this money would be used in this manner and this is a reform which will accompany this recapitalization. Well, I think these are some of the issues I'm sure this eminent panel will and also there will be technical experts who will be supporting them.
Yes.
I think they should be able to come at fair conclusion.
Mr. Khan, you've made it amply clear what should be the principles that this committee will look at. They have to look at the retained earnings, which is about 10 lakh crore that the RBI has, and then there is a yearly flow. So a formula will have to be derived for both. How much of the annual surplus RBI can keep for itself and how much it should transfer to the government, and what it should do with the 10 lakh crore that is already accumulated, much of which is just a revaluation and not really earned money, not sitting there as cash with the Reserve Bank. So these and other issues will have to be decided upon by the committee, but it's an eminent committee and well balanced between RBI's interests and the government's interests. That's the word coming in from an ex-RBI deputy governor. Thank you very much, Mr. Khan. And back to you, Ashmit. An important decision taken, and we will look at the next 90 days with much interest.